All right, so in the last video, we did a high-level overview of FundRise, and I thought the next logical thing to do was take a look at my actual FundRise account. Now, I've had this account for around 2.5, maybe 3 years, and it's been pretty consistent. So as you can see here, this is when you first log in. I have roughly $5,000 in there, a little bit under. Returns to date, so over the 2.5, 3 years, I've made about $533. As you can see, I guess I started in August 2017. They have different account levels. So this is, I just recently switched to advanced account level. It gives you a little bit more freedom to pick different things, but we'll take a look at that in a second. I'm on the balanced investing plan. So they have a growth, a balanced, and an income. For my situation being, almost 40, the balanced investing is probably the right mix for me. If I was significantly older, I may go with the income plan. If I was a lot younger, maybe 18, early 20s, I may go with the growth plan. But I like the balanced plan overall. So let's look at the performance. That's probably the thing most people care about. All right, so we'll go to previous years here. You could see my account value. I started small. I was just testing it out. I didn't know a lot about FundRise, so I put a little under $1,000 in, and then I slowly let it ramp up. For this long stretch here, I pretty much just let what was in the account grow. And then as you can see here, beginning of 2019, I really started adding funds to it, and it really ramped up. So performance-wise, 2017 wasn't that good. It was 3.5%. And what you'll see with FundRise is when you add funds, or when you initially add funds, there'll be a period where it says ramping up. And that's where the different e-REITs they place you in are basically, they're either acquiring properties, or they're loaning out money, or whatever method they're choosing to do with that e-REIT. It's in a building phase. So when it's in the building phase, it's really not returning the true amount of money you'll see over the long term. So it'll be significantly less. So 2017 was kind of a down year. I'm like, you know what? I only have a little bit of money in here. I'll just let it run and see how it goes. So 2018, I saw a 10.4% return, which was really good. I was happy with that. 2019, I added new funds. So that kind of jumped down the returns because it wasn't all in one lump at the beginning of the year. It was throughout the year. And I still got roughly around a 9.9, 9.8% return. And as you can see here for 2020, at 0.1%, again, adding new funds, so things are ramping up, and we're at the beginning of the year. We're in mid-January right now. So as you can see, all time I'm averaging around 9.9%. So that's a pretty good return for real estate. Now, again, as I stressed in the other video, this portfolio hasn't been through a significant downturn. We'll see how it does during a downturn. And I'm not putting a ton of money in here where I'd be concerned if I did lose all this money. So a 10% return as of right now, I'm really happy with it. So let's take a look at the portfolio. So as you can see here, as I added money throughout the year, there were different e-REITs that they put the funds into. The bulk of them are in the income and growth e-REIT, and then it goes down here as different e-REITs were formed as I added money throughout the years. There's a total of 182 active projects, which I like to see because it's mixed over, a significant amount of projects. It's not concentrated in any one area, and it's also mixed, as you can see here, between there's where they debt projects, equity projects, and you can see as it goes down. So there's debt and equity investments. So a mix of locations, a mix of different types of projects, a mix of locations throughout the United States, as well as a mix of investment structures. So that's all good things to see, right? You're not concentrated in any one location. You're not concentrated in any one structure of investment. And there's also different ratings, which are the risk ratings of the underlying projects. So you got to mix here everything from C, B, A rating. So A rating's the best. but generally the higher the rating, the less return, return balance. So as you can see, it's mixed through a variety of things to give you a decent amount of diversification, as much as you can really with real estate. So this is the other section I think is interesting. So let's take a look. We'll start in January 2019. So every quarter, the first quarter in January 2019, January 9th, I received $25 in dividends. Not too bad. I did reinvest those dividends. And then in April, I received $30 in dividends. So I added funds. The dividends increased on their own. So increasing. And as you can see here, pretty consistent throughout the rest of the year. July, $48, and October, another $48. So the dividend payments, I'm reinvesting them, so I'm not needing these for any type of income. But it's nice to see that the dividend payments are growing, and as I reinvest them, they will continue to grow, and as I add additional funds. So another area here, and I apologize, it's a little bit behind the camera, so I'm going to move the screen a little bit so I can see it. But as you can see here, when I was talking about the different projects, it plots them on this chart. So you can see there's one A project, a couple B. Most of them are going to be between B and C, and then a little bit more risky projects. So it's good to have these ones in the middle here. They're the balance where you're going to see a decent return, not as much risk. So you want to kind of see a concentration in the center, and then anomalies here out on the edge of either more risky or less risky projects to kind of give you that total balance. All right, guys, thanks for watching the video. If you have any questions, comment below. Don't forget, if you are not subscribed, to subscribe and like the video. It helps spread the message. And if you haven't already watched the first video that goes over FundRise in more detail at a high level and not specific to my investment account here,